Paul McCulley, former PIMCO chief economist, still with us to participate in our conversation. Mr. Lockhart, welcome. Good to have you with us. What do you think?
Well, I've been listening to the commentary up until this moment in this half hour, and I think people have it mostly right. David Kelly thinks they're done. I would put this nuanced spin on it. They're done if conditions allow them to be done, conditions that we really cannot predict very well for the coming months. But if their current outlook holds, there's a good chance they are done. But they're not done because they've made a decision to be done. I think Powell and company will keep their options open. And in the coming press conference, I doubt you'll see much of a signal about what they'll do in December.
We've had, Paul, this setup before where market is almost unchanged after the statement. Then the press conference begins. He says something relatively hawkish, and off we go, for that day or sometimes for the next several weeks. Now, last time was a little bit of a break from that pattern. But point being, what should we be on the lookout for in terms of his remarks when he starts in about 10 minutes?
I think a lot of the questioning is going to be on this whole issue of how close are you to sufficiently restrictive, because that's magic language in Fed speak, that they want to get to sufficiently restrictive, and then they want to hold there. So it's really a two-pronged sort of issue, is are you sufficiently restrictive? And I think he will fudge on that one. And then the issue is, how long do you plan to stay there? And I think, as Dennis was saying, is we're going to stay there until we get evidence that we don't need to be here anymore. So I think that, essentially he's going to try to encourage the marketplace to hold the back end of the curve up in anticipation that long is long.
Mr. Lockhart, why has the economy remained so resilient in the face of what have been very aggressive and steep interest rate hikes? Why hasn't it seemed to slow it down, even though there are signs now that maybe it is, in fact, slowing?
Well, I think the basic dynamic is one of consumer spending being held up by good employment outlook on the part of households. As long as people feel they're going to be employed and they have some income security, the American consumer will consume. And I think when the outlook changes and there's a little bit more to worry about in terms of employment, maybe we'll see a slowdown in spending. But it's being driven by spending, and the American household has both perhaps the balance sheet, the savings to continue spending still, as well as a positive outlook in terms of income.
And so just to stay on this point, Dennis, for a moment then, do you think that they can convince the markets to stay up here at sufficiently restrictive for a pretty long period of time? Or does it still depend on things like the jobs report Friday morning and how that evolves?
In my experience, it's very hard for the committee to shape market outcomes. I think the committee is more of a mind to simply set policy at the policy stance they think is correct, and hope the markets are aligned, and hope the markets will help. But the idea that they can say something in a press conference or in a speech or in a statement that actually produces an outcome in terms of bond pricing in the markets, I just don't think they have confidence they can reliably do that on an ongoing basis.